Hello friends, welcome back to another part of our CAIIB Maters Series. If you have missed the earlier part of this series, then you can watch them from the link provided in the description. So before starting, if you haven't subscribed to this channel, then do subscribe now so that you don't miss any important lecture, since this channel is all about quality content. So don't miss any important video before your exams. Also join our Facebook group, which is a community of like-minded, goal-oriented aspirants. We are also posting many one-pagers in the group till exams, so do join the group from the link provided in description after you finish this video. Now friends, this is another important video in our series. In this part, we will discuss the strategies for Bank Financial Management paper. Now this paper consists of 4 modules, that is, first is International Banking, then second is Risk Management, then third is Treasury Management, and last one is Balance Sheet Management. Now friends, this is one of the toughest paper in both CAIIB as well as CAIIB. Now friends, the problem with this module is that no candidate is practically working on these topics. So it's difficult to understand and thus difficult to score. So friends, this paper is equally difficult for both science as well as commerce graduates, since most bankers work in retail branches and very few are there who are actually working in forex or treasury branches. So for most bankers, this paper is indeed challenging. Now let's see how to tackle each module. First of all, let's see the weightage of each module. Friends, over the years we have seen module A and module B covers the maximum part, that is around 65 to 70% paper. Now friends, keeping in view of this trend, we also give maximum practice for these 2 modules in our 1000 series. So if you cover these 2 modules, then your chances of clearing this paper increases a lot. So ideally, when you start for Bank Financial Management paper, start with module A, then go on to module B, then module D, and lastly module C. I will explain you the reason for doing module D after B later in this video. But as of now, my recommendation is follow this sequence of study only. Now let's see each module in detail. In module A, focus on Forex. Here don't miss cross currency rate mechanism, as lots of questions year on year have been asked from this. Then also read letter of credits in depth. Here don't miss UCPDC 600. Now please note, we have published many one-pagers regarding UCPDC 600 in both our YouTube community as well as on our Facebook group. So do join our Facebook group and access those one-pagers. Then also read correspondent banking and NRI accounts. In this, just focus on grasping facts and rules related to their operations. After this, go for ECGC, and at last, don't miss FEMA. Now friends, though I would recommend not to miss a single topic from this module, since as I said earlier, module A and B are heart and soul of BFM. But still, if you are on a tight schedule or short on time, then you can skip the chapter Facilities to Importers and Exporters. Let's move on to module B, that is Risk Management. This is also an important module. Now in chapter 8, that is Risk and Basic Risk Management Framework, study Risk Management Framework, it's very important. Also practice case studies given in our 1000 series related to this. In chapter 9, that is Risk in Banking Business as per Macmillan, just get an overview about types of risk, as most often in exam you will be given a statement and then you will be asked what type of risk it is. Now in chapter 10, now friends, these chapters are as per your Macmillan. Now we are discussing each chapter in detail. Now in chapter 10, that is Risk Regulations in Banking Industry. Now friends, this chapter is a core chapter in this module and lots of case studies are asked from this chapter. Don't miss even a single topic from this chapter. Study Basel Accords in detail, then composition of regulatory capital. Friends, please note here numerical is asked, so do remember Common Equity Tier 1 capital ratio and other formulas. Then study internal rating based approach, then capital charge for credit risk, then credit risk mitigation, then capital charge for market risk. After this, read capital charge for operational risk, then ICAAP. Now friends, please note lots of questions have been asked from this topic in previous years. Then capital conservation buffer. In this you can expect a case study. Then also read leverage ratio. After this, read counter-cyclical capital buffer. And lastly, don't miss haircuts. So friends, as you can see, most part of this chapter is important, and since case studies from risk management module comes from this chapter only, so it's better to prepare this chapter in depth. Those of you who have our 1000 series of BFM, do practice case studies related to CCB, haircuts and RWAs. In chapter 11, that is market risk, you should prepare market risk management framework. Also don't miss VAR, that is value at risk, and stress testing. IABF has asked lots of questions in past from both these topics. Next, in chapter 12, that is credit risk. In this chapter, you should prepare credit risk management framework. Also focus on LRM, that is loan review mechanism, hedging, credit derivatives and CDS. Lastly friends, recently IABF has started asking questions on transition matrix and Altman Z-score also. We have given many case studies on both these in our 1000 series, so do practice them at least twice before your exam. In chapter 13, that is operational risk and integrated risk management. In this, prepare operational risk quantification and integrated risk management approach. These two topics should not be left out. In chapter 14, that is liquidity risk management, read principles of sound liquidity risk management, stress testing, statement of structural liquidity. Lastly friends, you will also find ratios in respect of liquidity risk management. There are around 7 ratios and please remember all those ratios. IABF has asked questions based on these ratios, and we are also expecting that IABF will start giving case studies or numericals on these ratios also. So do remember that table given in your book. Now friends, in your Macmillan just table or theory is given, but we have given a case study in our mock 2 of BFM on our YouTube channel and also in our 1000 series. So do access that mock test on our channel so that you will get an idea about how the question can be framed. In chapter 15, that is Basel III framework on liquidity standards, just focus on HQLA and LCR. I would suggest you to watch our LCR video, that is liquidity coverage ratio video on our YouTube channel. Just do the points mentioned there and also the case study. Last time also case study on LCR came in the exam, which was similar to that which we discussed in our channel. You can practice more case studies on HQLA and LCR in our 1000 series. So friends, as you can see, we left very less topics from both module A and module B. Frankly, if you prepare both these modules as discussed above, then you have already prepared your 65 to 70% paper. Now let's move on to module C, that is Treasury Management. Now friends, here you can easily skip chapter 16, that is on Introduction to Treasury Management. Just read the important points given at the last of this chapter. So in module C, start with chapter 17, that is on Treasury products. Here just read about various Treasury products. IABF generally asks objective questions and no case studies from this chapter. In chapter 18, that is funding and regulatory aspects, here read about CRR, SLR and LAF only. In chapter 19, that is Treasury risk management, just read risk management. Here focus on VAR and duration. Now friends, I don't know what fascination IABF has with VAR and duration, but they ask this in almost every paper. So read these and also revise before exams. Do practice all the questions based on VAR and duration in our 1000 series from our 1000 series. In chapter 20, that is derivative products. Now friends, this is also an important chapter for case studies point of view. Just start with reading basics of forwards, options and futures, and then straight away move on to interest rate and currency swaps. Now these two are important concepts and case studies are also asked from this. There are in fact no case studies in Macmillan, but we have included around 3-4 case studies on swaps in our 1000 series, so do go through that before your exam. You will in fact get an idea about the process of swaps. In chapter 21, that is related to asset liability management, just focus on roles of treasury in ALM and uses of derivatives in ALM. So friends, if you focus on above topics from this module, then it's easier to tackle module C in this paper. So strategy for module C is just doing selective case study, unlike module A and B, which you need to read in depth. Lastly, let's see strategy for module D, that is balance sheet management. Now friends, when you go by the page count in your Macmillan, This module is covered in very few pages as compared to module A and B. Now, one reason for this is most topics of this module are already covered in module B, that is risk management. When you read this module, every now and then you will notice this. So that's why it's important to cover module A and B in depth, since it covers module D also. So I will discuss the topics that you need to read from this module in chapter 22, that is components of assets and liabilities in bank's balance. Just read significance of ALM and then read NII, that is net interest income, and NIM. Also read about economic equity ratio. Just read these topics only from this chapter. Focus on solving case studies on NII and NIM. Those of you who are having 1000 series, solve the NII and NIM practical case studies. We have also published practical case study of ICICI Bank in our BFM mock test 2. So do watch that video on our YouTube channel. The link is there in description for that video. In chapter 23, that is banking regulation and capital, now you can easily skip this chapter since it's already covered in module B. In chapter 24, that is capital adequacy, friends, this chapter also you can skip easily since it's already covered in module B. In chapter 25, that is supervisory review, friends, this chapter covers mainly ICAAP, which we have already covered in module B, but there it was covered in short. In this chapter, it's covered in depth. So just read about structural aspects of ICAAP, and at last you will see outline of ICAAP. So don't miss that part, but just have an overview without getting into depth. In chapter 26, that is pillar 3, market discipline. Friends, this you have already covered in module B, where you read about Basel III. So I would suggest to skip this chapter as well. In chapter 27, that is asset classification and provisioning norms. Now this is an important chapter from this module. Lots of questions are asked year on year from this chapter. So don't miss a single point from this chapter. You will be asked a case study related to provisioning also. So do all the case studies related to NPA provisioning from our 1000 series. And also watch our NPA provisioning lecture available on our YouTube channel. There also we have given 2-3 case studies. The link for that lecture is there in description. Do watch that lecture when you are doing module D. At last of this chapter, you will see CRILC or S4A and IBC code. Do read all these. IBC is in fact currently hot favorite of IIBF people. In chapter 28, that is liquidity management, friends, I would suggest to skip this chapter as well. Most of the points you have already read in module B under liquidity risk management. Then in chapter 29, that is interest rate risk management. Friends, this chapter is another important chapter. Normally, case studies are asked from this chapter only. Read sources of interest rate risk, then also read interest rate risk measurement techniques. Here most often you will get case studies related to RSA and RSL, that is interest rate sensitive assets and liabilities. Do all the practical case studies which are there in our 1000 series. In chapter 30, that is RA-ROC, just read economic capital and RA-ROC. It's a short chapter of hardly 3-4 pages, but questions are always asked from RA-ROC. So friends, ideal strategy for module D is obviously selective case study and also doing this module after module B. By using this strategy, this module can be easily finished faster. Friends, hope the strategy for BFM is clear to you. If you follow the points as given by me and also practice from our 1000 series of question bank, then you can easily clear the bank financial management paper without wasting your precious attempt. With this, I wind up this video. All the links to the resources mentioned in this video are there in description. So do check out. See you again in the next part of this series.